taking the time with us to be with us here on the TD Ameritrade Network. Let's begin with your take on the inflation data that just came out. CPI slightly higher than expected.
I'd hate to be Jay Powell, that's what I'll say. I mean, he's going to navigate a situation where a lot of these numbers are coming in slightly hotter than expected, which is to the good. We see Treasuries sell off, as you just said. And at the same time, we're demanding these rate cuts because of what's happening globally. So he's going to have to balance our own backyard with the rest of the world. And I think that's going to be a very, very difficult thing. The next 18 months are going to be volatile just because of that.
Yeah, I guess I'm wondering, does the CPI that's been inching its way higher here, and as you mentioned, in our own backyard, outweigh some of the concerns that we've been hearing? I mean, Singapore concerns, we've got Venezuela, Argentina. I mean, it seems like the whole world, for the most part, is just kind of crumbling by the wayside, but yet the U.S. still seems to be an island in many ways.
Yeah, no, it doesn't trump those other things, no pun intended.
Okay.
The rest of the world's going to be more important. I think we've got to, the $15 trillion of government debt priced at a negative.
Right.
That's going to override our CPI. So we've got a big worry with what's happening and what's weighing on our bond prices, what's happening around the world and what's happening in the other economies. And so we're going to have to navigate that. That's going to be a very difficult thing to do, because how much do we cut these rates to stoke our own problems here as far as inflation goes versus the deflationary effect that we're seeing around the world?
Yeah, this is going to be fascinating as it plays out, Scott, and we hope to have you here with us to help us break it down as it does. But I want to move on to...
I hope to be here too.
I want to move on to the UK, as the U.S. National Security Advisor John Bolton told the new Prime Minister of the UK, Boris Johnson, that the president has his back. Basically, he said if that's the decision of the British government, that is a Brexit, then they're going to support it enthusiastically. And what he's trying to convey basically is that we're with you. As he said, again, we're with you. Does having the U.S. support the UK minimize some of the concerns from the looks of the British pound on year low prints? It seems like it is yet to.
Yeah, it hasn't stopped the slide in the pound, and that thing looks like it wants to print to 119 here soon. And I think that but it does make a big deal to have the U.S. have the back of the UK. So number one, to stand there beside them or behind them, that is a big deal as far as a trading partner goes forward with Europe. But number two is, in the short term, it's kind of like the short-term crisis versus the long-term goal. In the short term, there's going to be some tumultuous movements in that currency, because regardless of whether the U.S. is there or not, for the currency going forward, if there's a no-deal Brexit, that's going to be a worry. So we have to worry about the short-term contagion versus about the long-term goals. The long-term goals, everything's going to be fine, right? In 2 years' time, everything's going to be fine, but we're going to see a pretty volatile currency in the short term, because there might be a no-deal Brexit. Who knows what's going to happen with that? I don't think it's going to be that big of a deal, but the scaremongers have everybody else worried about it more, so we'll wait and see, but that's going to cause that currency to be all over the shop.
Scott, in terms of expectations for potential volatility in the short term, as you mentioned, I'm wondering if the U.S. backing the UK emboldens others such as Italy to follow a similar path.
Well, we keep talking about the next 18 months, China and what they're going to do with Trump, and they're going to wait out the election or not. But we've also got this issue with Brexit. And look, if there's a successful Brexit with a no deal,
yeah,
you're going to find other countries starting to line up to get out of that thing. And I've said this before, and I don't mean to bore everybody out there, but I was there when we went in, and I say we because I have a British passport, but it was a bad idea.
Yeah.
You've got 28 countries with no common language, no common start date, and no common culture, and you're going to try to keep them together. We can barely keep Texas and California in the U.S., right?
Yeah.
So what are they thinking they're going to do? And so I think it's a failed experiment, and I think the next 18 months, if this goes well for Britain, you'll find other people knocking at that door.
Yeah, and vastly different economic situations as well. Let's talk about a currency that kind of stands alone relative to some of the weakness we were just talking about as far as European currencies, the euro and the British pound, the yen to new highs this week. Again, it just keeps going, Scott.
Yeah, have you noticed there hasn't really been any negative news out about Japan? There hasn't been anything hitting the tapes. So they've been kind of on an island on their own, a good island on their own. And I think that as long as that stays to be, that's the case, I think that that's going to be kind of maybe actually a safe harbor right in the short term, as crazy as that may sound to say. So as long as we haven't seen anything negative, they don't have any issues, and they continue to do what they're doing, which I disagree with as far as their central bank goes, but it's stabilized things there. That could be a place where we don't see a lot of waves.
How closely are you watching Argentina and the recent activity? We saw the primary over the weekend, a lot of unrest there. I'm wondering, does this impact currencies ultimately? I did see some major weakness recently in the peso. What are you seeing, Scott?
I'm seeing just general unrest that way. I think that it's, I'm not going to watch Argentina in its own silo or its own vacuum. We've got a lot of things happening around the globe that, I started off this segment by saying I didn't want to be Jay Powell, because these are the types of things that he's got to be thinking about, right? You ask me, but he's got these things front and center on his desk, and that's going to affect how he handles our dollar and our own economy and our own rate cuts. So it's going to be very interesting, because the rest of the world is not in a good way. It's really not in a good way. And here's the bottom line. They're all managing this with 1955 economic playbooks, and it's not working.
Yeah.
I mean, look at these negative interest rates. So here's what they have to do. They need to fix their own economies and get their GDPs going, and nobody knows how to do that because they're so stagnant. They need something the likes of the internet revolution to happen, which nobody can see happening right now. That's what the world needs, and that's what the world's going to have to wait for. And how low do the negative rates go before something like that comes around the corner?